Hey everyone, welcome to the 10 Line Investor channel. In this video, we're going to look at one sector which has almost bottomed and which has almost made a bottom and which can rise going forward. And also we're going to look at one stock which has posted profits after 9 long years. Another stock from the mid-cap space which has posted all-time high profits, all-time high sales, and also a very good operating margin in the last year. And apart from this, we're going to look at also 3 other stocks, one small cap, one mid cap, and also a large cap stock. So that's going to be our focus for today. And also going to learn from which scanner I have picked these stocks and how I am picking these stocks. Now remember, whether the market is bad or good, the strategy to pick stocks is always going to be the same. Sometimes the stocks perform, sometimes they do not. Okay. Having said that, let's get started today, and let's start with the Nifty Outlook as always. Okay, but before that, the stocks we're going to discuss as always is going to be from these 4 scanners, and today I have at least one from each scanner. Okay, so that's the scanner that I always use. The link can be found in the description, or you can also find it in the Twitter page, pin tweet. Okay, so first with Nifty Outlook. So Nifty, actually last week we had a nice long wick around that zone. Still the higher high, higher low on the weekly time frame is intact, which means uptrend on the weekly charts is still intact. Though on the daily time frame we are still in a very strong downtrend, but this week we have formed an inside bar, almost an inside bar, and we had long wicks on top and bottom as well, which signifies neither the bears nor the bulls have won this week, but the bears still have a very strong control. And I feel, given the long wicks are on the zone and given that the upper higher high, higher low structure is still intact, I think we still have a probability to head higher. But also remember that the small cap and mid cap index have broken the lows, the previous previous week low, and we've had a very bad closing. So broader market is very, very weak. So you have to follow the portion sizing rules, and you have to buy only a small portion if you want to buy, and add on only if the stocks do well. Okay, so otherwise you can always take my videos as learning video and see how you want to improve your knowledge. Okay, so that's the Nifty Outlook. Now moving on to the daily charts here. Daily charts also, we are in a strong downtrend. As I said, we still just using these pivots. If you see here, we are still in downtrend. The pivots are still going lower and lower, but this week we now have a very strong pivot over here, which means we have a nice base. This looks like a rectangle consolidation to me, or you can also call it like a probably a cup and handle. No, this might be the cup. This probably might be the handle. I'm not sure yet, but this is a nice base that's forming here, and we have to go above 17,210 if we have to head towards the upper end of this channel, right? So that's when the trend would change above 17,210. So even if you're a positional trader on Nifty, or even if you're an option trader, you will get a very good setup. If we cross 17,210, then we might have a good move for at least a few days going forward. Okay, so that's the daily chart perspective. Now the sector for today, this week, to watch out for is the pharma sector. Pharma sector has been consolidating for quite some time. Almost it's back to September 2020 levels. Here we almost 2.5 years of consolidation. We're back to September 2020 levels, and we have formed kind of a strong consolidation here. We had some nice move here, but then we went up, and again we are forming we have come down and tested that low. Now this is a very, very important zone for me, because this looks like multiple times price has reversed from here, and for that reason I would be very bearish. I would be even further bearish if the pharma sector breaks and goes below this, right? But for now, next week if we reverse from here, or a couple of weeks if we reverse from here, then for me that's a good sign. We can keep a stop loss around this zone for the index itself and take some positions and see if they work. But remember, stocks do perform on their own, so you might also want to see the stock specific action as well. Okay, so now I'm going to show you the relative strength chart of CNX Pharma versus Nifty 50. Why am I doing this? The reason I'm doing this comparison is because I want to understand how does the pharma index itself perform against the Nifty 50 index. Now this is a chart since the pharma index has been available. Now we started here, we went up, we came down. Again there was a move up, it came down, we went all the way up, and we corrected all the way down. Now price again went up September 2020, we started again correcting, and we have again come down towards that channel support. Now this channel is a very, very significant channel because of the multiple times the stock has reversed exactly from the middle, If you see here, we went up, we took support, again we took support here, broke down support here, and again came down. Again we took resistance over here, the price was rejected, and we came all the way down. For that reason, this is a very significant channel for me in terms of relative strength, and that's also reason when I club this chart and the price chart, I think a bottom is done and we might head higher from here. Now if you look at the weekly candle in this relative strength chart, it has a very strong bullish candle, whereas the price is not bullish yet, but the relative strength is bullish. It shows that this week Nifty outperformed, PHARMA outperformed Nifty, and we might see there's a probability that Nifty might outperform, PHARMA might outperform Nifty going forward. So the reason I'm stressing this over here is because the PHARMA index, if it goes up, let's say 1%, then it might outperform Nifty. If Nifty is just 0.5%, PHARMA index might go 1%. Now, if Nifty goes down 1%, PHARMA index will not go down 1%, but probably 0.5%. Now, that's the kind of relative strength I'm mentioning here, right? So there is a chance of outperformance in PHARMA going forward, and keep that in mind. Now, if PHARMA is strong, then I need to have a stock from the PHARMA space. So today I'm going to discuss one small cap stock, which is Kilitch Drugs, which also looks very good and which also has reversed from a very good channel support. But first, let's take a look at the fundamentals here. Now, this is just a small cap company with 245 crores market cap. Now, sales have been kind of dropping, and until 2016, it went all the way down to 1921 crores. And now we are back again to 131 crores. Also, the operating margin went down. It was negative for a few years, and then it again went up, and now we are almost back to 2011 levels of around 13% operating margin, and we also profits are back, and it's trending higher. Now that's why I have the focus on this stock, and when I club this with the fundamentals, the stock has reversed from a primary trend line support. Now this trend line is significant for me because of the multiple touch points, and this week's candle is a very strong bullish candle. We have reversed with this lower wick, and we kind of closed almost above that zone over there, which is also a strong support zone. And I think we might head higher back to the levels of 290 over here, which is the trendline resistance. Now this point over here, if you connect those points, this looks like a strong trendline resistance, and we might head over here. And if the company performs well, we might also break out and head higher, right? So having said that, you can buy the stock current market price, which is 150 levels, stop loss of 17%. Now this is a small cap stock, so there might be a good volatility. So you want to keep a very strong stop or wait for a tight consolidation, and then you can add as well. And we're looking for targets of 290, which is 90% from the current levels. And this might come probably in the next year or 2 years or so, right? So that's the first stock from the pharma space. If you do like my analysis until now, don't forget to hit that subscribe button, and also don't forget to like this video and share this with your friends. So we have 4 more stocks for the day. So let's get to the start of the second stock, which is GE Shipping, or the Great Eastern Shipping Company. This stock had a crazy turnaround in terms of fundamentals. It posted all-time high sales, profits, and operating margins. And this is a mid-cap company. P is just 4.54. That's because of the very high profits it posted in financial year 2022. And also fundamentally, the stock looks excellent. But what has happened here is this stock had a multi-year breakout, almost a 7-year breakout here in the month of July 2022, almost a 14-year breakout in July 2022 with massive volumes. You can see all those volumes here with massive volumes. And this stock is now trading at almost 2008 highs, right? So we've broken out already, just a sideways consolidation which is happening around the 2008 highs, and we might head higher from here, right? Now this setup is a fundamentally excellent setup as well, technically also a very good setup, and this is a beautiful horizontal breakout setup, and we are consolidating. If we kind of drop even further, you can go ahead and buy the stock as well, right? So just moving on to the weekly charts here to show you why I feel this stock has made a bottom. Now this was a breakout that I discussed here in July 2022, and then we kind of went way up, consolidated, went up, and again we're retesting the zone over here, and this is a very significant trend line. Now if you look at the points here, 1, 2, 3, and 4, that is a very significant trend line, and you can also see the wicks around that support zone, right? Now long wicks, lower wicks, which shows that there is a strong demand around these levels, and this week we had a bullish candle. Now for that reason, this stock is the second stock that I'm recommending today with a stop loss of 560. The current market price is 625, which is just 10% stop loss. I'm going to look at targets of 60%, which is almost 1,000 levels from here. Now remember, this is a shipping company, so the profits can be humongous if they have multiple orders. They have very high operating margins of almost 50%. So profits can be huge if they have multiple orders. and I think this company might do well in the next couple of years or so. So second stock that's for today. Third stock today is 63 Moons. Now this is a turnaround company. Now this is a very interesting stock because fundamentally the stock is a small cap of 809 crores. It has not posted profits or so in the financial year. But what is changing is the fundamental profile of this company, right? Look at the quarter results that we've had, and look at this quarter results, right? Now, I'm not sure why this company posted such high uh, increase in turnover. You can let me know in the comments if you know. But the most interesting point is that operating margin, right? So operating profits. For the first time since I think many years, this company has posted profits, and the stock is looking good and about to break out from a very long consolidation correction. So overall PAT also is high. Now, as I said, looking at the monthly charts, the stock is in a 15-year downtrend. Right now, this downtrend started back in 2007, and the stock has been going down and down and down. Now, finally, we had the first higher high, which is a sign of an uptrend in 2000 since 2007. Right, we had this in 2022, and then since then we are consolidating. Now, look at this consolidation over here. Now, we have not had this stock going down since that consolidation over here. We had long wicks, we had a bullish candle, and we are retesting the previous breakout zone after some massive move up here in last year in 2022, right? Now, this could be a turnaround. Now, I'm clubbing fundamentals and technicals here, and that's why I'm saying it's a turnaround. But take a look at the weekly chart. We are also reversing from a primary trend line support. And that's a bullish candle over there. We went up, and again, we're retesting. Now, I don't think the stock is going down. Most likely, the stock is heading higher from here, and you can get some really good returns because the stop loss is just 10%. So current market price is 176. We're going to buy the stop loss of 158, which is 10%. Look for targets of 110%, which is the previous highs. Now remember, if you kind of get this kind of setup, it is best to ride trends because this is a turnaround company and the stock might head much higher. So don't stick to the targets that I say and just book out in case it heads there. If we do get a good opportunity here, it can head much higher levels. So that's the third stock today. The fourth stock is Birla Corporation, kind of a mid-cap company again from the cement space. And I've already posted last week on Twitter that cement sectors will do well and cement stocks will do well as well. And here we're discussing Birla Corporation, which is around 7,200 crores market cap, very high PE, but the ROC is pretty decent. But here also we had a 3-year breakout. We had a beautiful 3-year breakout. We went all the way up and we then broke down from here. If you see, we had a breakdown after a triple top, and then we almost came down. But now what's happening? After this breakout, we are now retesting this breakout zone. We had some high volumes here, and now the stock is again forming a bullish candle this week in spite of the market being weak. The stock has not gone down in the last 4 or 5 weeks. So there is bullishness in the stock, and the stock might do well going forward. The current market price is 935. We're going to keep a stop loss of 840, which is around 10%. And look at 60% target, which is around 1,500 levels from the current levels. So that's the fourth stock for today. And if you're still with me, you'll be excited to know the fifth name, which is Godrej Consumer Products, which is a large cap company. It is in the futures and options space, so you can go ahead and take a futures trade if you want to, but do keep a stop loss. Now, this is a large cap company, as I said, ROC of 18.5, ROE of 17%, PE 58. You can decide if it's overvalued or undervalued, but the setup is looking good. We had a breakout back in May. This was the COVID lows. We kind of consolidated. We had a breakout. We went almost straight 4 months up, and then we retested all the way back down. And we had a long wick here, again a long wick. We went up, and now this is one of the strongest stocks in today because of the strength that we've been having in the last many months here. Right now, again, this month we've had a strong consolidation for the last 6 months, and now looks like this stock is going to break out and head higher. So we can buy the stock at current market price, which is 950. Keep a stop loss of just 6%, and that's why I said you can also take a futures trade if you want, but do keep a stop loss and do assess your risk. And we're going to look for targets of 26%, which is 1200, and which should give us a risk reward of 4.2 from the current levels. So these are the 4 stocks. Don't forget to subscribe if you like my video and if you like my analysis. Otherwise, I'm going to leave you here. Take care, stay safe, trade safe. Until I see you in another video. Bye-bye.